Hi, Courtney Smith here, and I've got a special guest today, Andrew Cardwell, who I consider to be the world's greatest expert on RSI. He wasn't the inventor of it, but he's the guy, I think, who's really created the correct way to use it and has also extended the concepts behind RSI way beyond what was originally published. But I'm not here to talk about RSI today. What I really want to talk about is something that he and I were talking about just a few minutes ago, and the question is, it feels like it's 1978 to 1980 all over again. Is that the way you feel it, Andrew?
Yeah, I think it is, Courtney. I remember when I first started as a broker. You know, it was just markets were moving from the mid 78, started moving up, commodities, gold, oil, and it's so reminiscent now of just everything's taken off. We've had helicopter bends supply the money supply, and the demand itself is basically more and more people realizing that currencies may not be the way to be, especially the dollar. The dollar is being debased with all this activity and stimulus and government spending and deficits. And it seems to me, as I spoke with a friend the other day, we used to have a dartboard in our office. And even though I was doing RSI charts and he was basically a technician looking at bar charts, we had a piece of dartboard, corkboard, that we used to throw darts at and just write cattle, hogs, and just as a joke. But if you look at markets in the last, basically since the end of July, identifying a trend, identifying breakouts, and the corrections are not very deep.
Well, one of the things I've noticed is certainly since the announcement yesterday, my quote screen has nothing but green letters on it. There's hardly anything that's red at all. What's the best way to play a mega bull market like this where the whole world is going up?
Well, I think you just have to be careful. First of all, you and I are both technicians, so when I look at a market, I'm looking for RSI reasons, I'm looking for moving averages, I'm looking at price patterns that are breakouts. What a lot of people have to be careful of is the fact you just cannot jump into any one thing. If you study your charts and you've seen that it's shown a bona fide bottoming pattern and started to rise late, say in July and August, and now we're just into an acceleration phase, then you're looking at the markets with sound judgment, sound principles, and quantitative analysis.
No.
I'm a little afraid sometimes say, well, people will say, I want to get in. Well, cattle hasn't moved yet. Let me jump over in cattle. But I think most people are starting to realize how inflationary it is, and it's probably going to lift all boats. But you have to be very cautious and careful that you're not jumping into something just because it's caught up in the excitement, and you're caught up in the excitement.
Well, how do we get into markets that are already in big bull markets like gold or silver or soybeans? I mean, there's no retracements in some of these markets. Do we just jump in, or do we really wait for some type of a retracement?
Well, using the RSI the way I do, we look for these positive reversal patterns. And on the way momentum works, the price will move up, the momentum will move up, and then you'll have a small correction, and momentum will fall off quite quickly, creating one of these positive reversal patterns where the market is showing momentum is oversold, but price is at higher levels. That's going to define the uptrend. And with these patterns, we're continuing to see them. You know me, I'm more of a position trader, so I've been long some of these markets for a while and using the corrections and slight pullbacks. But some of them are so bullish and people are so caught up in it that they're not really correcting on a day-to-day closing basis. They may open lower and look like the exhaustion has run its course, only to find a low and support during the day. More people start buying it. So I've actually been looking at hourly charts for corrections and seeing the same positive reversal patterns.
How are we going to know when this is all over?
Well, the way I do the projections, I set a target. Like my target, I'll give you one now on gold that we've had for about a week, 1463. And people 3 or 4 days ago told me, the ones that didn't have my courses told me I was crazy. Now those same people that told me I was crazy are now calling and say, how did you know that? When you set targets, they should achieve these targets as they have been all along, achieve and surpass them on a closing basis. When I set a target on the upside and it gets near that price level but has trouble closing above it, that's usually a sign that the market's very much ahead of itself and due for a correction because it cannot achieve those targets. We had one on the Dow recently, just set up 11,450. And I'm mostly futures, currencies, bonds, but I don't fight trends. And this has been up since the end of August, and then in September it turned up again. Some of the indicators we use on moving average on close, and then I have some that I use moving averages on highs and lows. It's still up. It doesn't matter to me why it's up. We'll find out the reasons later because, you know, I've done workshops where I title it Today's Technicals Write Tomorrow's Headlines. And I think that's what we saw in gold, silver, but we saw cotton breakout, coffee, sugar. And it wasn't until after the move had started that we found about the reasoning of floods and tsunamis and everything happening that affect the supply side. I just saw something the other day that some analysts are thinking coffee's going to jump another 10% based on weather problems. But these market moves that we're seeing now did not start 3 days ago. They were put in place by the patterns that set up on the charts. The rules most people use 70 and 30 as overbought, oversold in RSI. Well, the rules I have for an uptrend is 80 and 40.
On the RSI, right.
On the daily RSI, and most of them have not retraced below the 40 level before they took off for another leg up. Well, so it's exciting times. I mean, I feel young again. It's like the late 70s.
Well, you're looking.
I don't feel 55. I feel 25.
Fantastic. Well, listen. Thank you very much, Andrew. If people want to know more about your products and services, what would be the best place for them to get information?
They can go to the website CardwellRSIEdge.com.
So that's CardwellRSI Edge.com. CardwellRSIEdge.com. That's
there's a little webinar on there I've done on an overview of my work, and also a small ebook called Trading versus Making Money. Big difference.
Which I handed out to all of my clients. It's a fantastic thing, and I recommend that everybody download that and read it. Thanks again, Andrew. We'll talk to you later.
Great to be with you, and I think, do you feel as young as I do? It looks like 78 and 79 all over.
If only I looked that young.
You take care, my friend.
All right. Thank you very much.
Bye-bye.
Bye-bye.